If you are new or developing traders and you still haven't been able to find consistency in your trading, most probably it's because you've been using a trading strategy that offers a high risk to reward but very low win rate. Now I can't blame you because the social media and YouTube has been pushing this really hard. But in this video, I will share with you 5 reasons why you, as a new or developing traders, need to start and focus on a high win rate trading strategy instead of a high risk to reward but low win rate trading strategy. Hey guys, how you doing? I hope everyone is doing well. Today I want to talk about a highly debatable topic in the trading space. And that topic is, do you go for a trading strategy that offer a high win rate? Or do you go for trading strategies that offer a high risk to reward? Now, why the question? Why do you need to make the choice? Because there's no such thing as a high win rate and high risk to reward trading strategy. All right, there's always going to be a tension between the two, so like a game of tug of war. If you have a trading strategy and you are tweaking it to give you a better win rate, you will tend to pull the risk to reward lower. Vice versa, if you have a trading strategy and you are tweaking it to give you a better risk to reward, you will tend to push the win rate lower. That's just the way it is. So there's no such thing as a high win rate and high risk to reward ratio. First of all, what is defined as a high win rate? A high win rate is anything above 60 to 70% win rate. All right, so if you have a strategy that offers you more than 60 to 70% win rate, that is a high win rate trading strategy. And typically it has a 1-to-1 risk to reward ratio, meaning that you would risk 1 to gain 1. A high risk to reward ratio is anything above 1 to 3, in my opinion. Right? So if you have a trading strategy that gives you 1 to 4, 1 to 5, 1 to 6, 1 to 10, that is a high risk to reward trading strategy. And typically it has less than 50% win rate. Now I know some of you are thinking, well, risk to reward and win rate is like a spectrum. So to make it easier for you to understand what is in my head and for us to be able to speak in the same frequency, what I did was I put strategies into 4 different categories, right? Into 4 different quadrants. Right, so let's just call this strategy quadrant. I'll go through this one by one with you. Okay, so quadrant number 1 is any strategies that offer less than 50% win rate. So WR stands for win rate, right? RR stands for risk to reward. And then strategies that fall under this category under quadrant 1 is strategies that gives you a risk to reward ratio of more than 1 to 1. So anything 1 to 2, 1 to 3, 1 to 4, so on and so forth, right? More than 1 to 1. Quadrant number 2 is any strategies that offer you a win rate of more or equal to than 51%. Okay, but then also offers you a risk to reward ratio more than 1 to 1, right? So it's 1 to 2, 1 to 3, 1 to 4 onwards. Quadrant number 3 is any strategies that offers you less than 50% win rate with a risk to reward of 1 to 1, no more, no less. Quadrant number 4 is any strategies that offers more or equal to 51% with a risk to reward of 1 to 1. The vertical line is risk to reward. So anything above the horizontal line, the risk to reward is more than 1 to 1. Okay. And the horizontal line is win rate. And anything to the right hand side of the vertical line, the win rate is more or equal to 51%. And anything falls onto the left hand side of the vertical line is any strategies that offers less than 50% win rate. There are 2 quadrants that we're going to talk about, and that is quadrant 2 and quadrant 3. In quadrant number 2, these are strategies that offer more or equal to 51%. That means you have an edge over the market. Go and watch my video on trading edge introduction. Okay, so anything above 51%, that means you have an edge. And not only that, you also have a trading strategy that offers you more than 1 to 1. So that's 1 to 2, 1 to 3, 1 to 4, so on and so forth, of risk to reward. That means you are already making it, right? You are already there, right? You have the quote unquote holy grail, happy days. Okay, now quadrant 3, again, watch my other video on the trading edge introduction. If you have a trading strategy that offers less than 50% win rate, that means you do not own an edge. You do not have an edge over the market. And especially when your risk to reward is equal to 1-to-1 only, no more, no less, it's only a matter of time before you kill your account and then you put your account to the grave. Yeah, so we're not going to talk about this. This is edgeless system, and then you're bound to kill your account and you lose your money. We're not going to talk about this. We're not going to talk about this either because, again, you already made it. Okay, so there's no point of talking about it. What we are going to talk about it in this video is this one, quarter number 4. Quarter number 1 will be covered in another video. So what you have here in front of you is an EV simulation. Okay, so if you remember quarter number 4, right, the risk to reward has to be 1-to-1, right? That falls into that category. Now, just to give you an idea of where it actually stopped at break-even, strategy A is an example of a break-even situation, right? Where it doesn't qualify as strategy that falls in quarter number 4 because the win rate is 50%, not more or equal to 51%, okay? With the risk to reward of 1-to-1, you expect to win 50 times and you expect to lose 50 times out of 100 trades. Your EV is 0, right? Expected value is 0. You are breaking even. This is why strategy A with a win rate of 50% will not go or fall under category of quarter 4, right? So strategy B, right? For example, it gives you a win rate of 51% with a risk to reward of 1-to-1. Out of 100 trades, you would expect to win 51 times and you would expect to lose 49 times. And therefore, your EV is 2, right? You will make a bit of money. Strategy C, you have a win rate of 55% with a risk to reward of 1-to-1. You would expect to win 55 times and you would expect to lose 45 times. And your EV is 10, right? Positive EV. Right? So you start making some money. Okay, the next one is I will share with you the 5 reasons I believe why win rate is very, very important, right? It is fundamental, especially when you are a new or developing an unprofitable trader. Okay, there's just so many gurus in social media, in YouTube, that is really stressing the point of getting a really, really high risk to reward with a very, very low win rate trading strategies. And I really don't think that that is actually a wise starting point for new or developing traders. Here's why. Now, before we start, there's going to be a couple of disclaimers. Okay, the first one is this context is for new, developing, and unprofitable traders. Okay, and secondly, this is not about cutting your trade shorter than your original analysis for the sake of win rate. What do I mean by this? Say, for example, in your original analysis, it tells you that you need to take profit at 40 points from your entry. Now, whatever it is I'm about to talk about, I am not recommending, I am not saying to you that you need to take profit at 20 points from your entry for the sake of bettering your win rate. I am not saying that at all. In fact, I'm saying to you, you need to stick to that original analysis. You need to stick to that 40 points away from your entry as your take profit, because that's what your analysis says. But that analysis has to be based, right? That 40 points away from entry point as your take profit has to be based upon a tested strategy, right? And the result of those tests tells you that you have a high probability outcome. So let's start with the first reason why you need to focus your energy and your time to work on a high win rate trading strategy. Reason number 1 is if you are using a high win rate trading strategy, that means you are already on the right side of probability, right? You have a natural edge over the market. Now, what do I mean by this? It means that whatever it is that you are trading or whatever it is that you are betting on, whatever analysis or whatever pattern or whatever prediction that you make, these things are already happening more often than not because you are on the right side of probability. The edge is natural. Now, can the edge be unnatural or artificial? Yes. Okay. So unnatural or artificial edge is something like if you play a roulette and you say pick a particular number. let's say you bet $10 on the spin giving you number 10. Now the odds, right? The odds are really high. The payout is really high. I think if I'm not mistaken, the payout is 35 times. Meaning that if you actually put $31 on number 10, if after a spin it gives you number 10, right? If the white ball falls on number 10, you'll get a payout of $35. So 35 times your risk, right? So it's 35 risk to reward ratio. If you put $10 on number 10, you will get, and the spin falls on number 10, obviously, you will get $350, right? So it's 35 to 1, right? It's an amazing upside, right? A huge risk to reward. But that is not natural because you are already on the wrong side of probability. When you made that choice that, okay, I want to bet on number 10, your probability of being right is only, right, 2.7%. Okay, so that's 1 divided by 37, sorry, yeah. So because you have 18 reds and 18 blacks and a 0, so yeah, 1 out of 37, that's 2.7%, okay? There's only 2.7% chance of you getting it right. That is really, really low, right? That's like you have absolutely no edge, right, over the dealer, over the roulette table. But why would people still take it? Because the dealer, right, to entice you to take the wrong side of the probability, right, the really, really extreme wrong end of the probability, the dealer offers you a very high payout. Okay, and that's what I mean by artificial edge. Now, reason number 2 is your analysis of prediction is correct most of the time, right? This is good. Why? Because it shapes your mind, your eyes as well, on how to interpret the market correctly. Reason number 3, it instantly tells you when you have been off your game. Now, just in anything at work, or where if you're an athlete, you're playing sport, and if you're a trader, things could happen in your personal life, right? Things could be happening at home. You have problems with a spouse, with your children, with your parents, or your personal health. These things could impact your performance at work or in trading, or if you're an athlete, like at sports, right? And these things are inevitable, right? At one point, these will happen, right, in anyone's life, right, including myself. And we are not Superman, right? We're just human. We still have emotion. Some can cope better than others, right? But nevertheless, each one of us will be impacted by what's happening in our personal life. And same goes with trading as well, right? When things are not going well in your own personal life, it will impact your trading performance. Now, if you have a high win rate trading strategy, it will instantly tell you, right, when you're off, when something is not right. Why? Because you expect to see more wins than losses, right? You expect to be right more often than not. And if that's not happening, and you suddenly experience like really huge, long losing streaks, and you've been wrong analyzing the market day after day, week after week, you knew straight away that something is off, something is not right. By having this high win rate trading strategy, you have that expectation, and when the reality tells you otherwise, it will give you a wake-up call quite quickly. Well, whereas if you have a trading strategy that has a very low win rate, you eat losses for breakfast, right? You think that you numb that pain. You think that, losing is completely normal. So when you are off your game, when something's happening in your life, whatever it may be, the losing streaks, it doesn't trigger you to kind of take a pause or take a stop and review and ask yourself, what is going on? Is everything okay in my personal life? Do I need to review my entries, my exit points, whatever it may be? And it wouldn't prompt you in your face that, is it possible that you've been taking trades that you shouldn't have taken? Is it possible that you stretch your take profit level to much further than your plan? Have you been following your rules? Did I enter too early? Did I enter too late? All these things, right? Did I oversize or did I undersize? All these things. Reason number 4 is a no-brainer. If you have a high win rate trading strategy, of course, it will build your confidence and help you stay positive, right? You can tell yourself that I can do this. The results are backing this up. And with a positive mind, you tend to make a good trading decision as well. Now, last but not least, reason number 5 shapes you to be patient and minimize over trading, right? So what do I mean by this? With a high probability trading strategy, high win rate, you need to be patient waiting for your A+ setups, right? Because that is your edge. You can't afford to be taking the B grade setup, the C grade setup, the setup that you have a lot of doubts that you haven't tested. You can't afford to, especially because you have a low risk to reward ratio, right? The 1-to-1. You don't have a lot of ammos, right? You want to make sure that you're consistently winning, right? You want to be consistently being right about your prediction or your analysis, right? And this actually shapes you to be patient, right? To actually wait for the right moment. You actually wait for the trade to come to you, right? And when you start doubting the setup, the trade, you know that that's actually not your A+ setup. The A+ setup should slap you in the face and hit you between the eye. You should be able to know straight away. And because you're focusing on the A+ setup, it restricts you from overtrading. The A+ setup tends to occur less, right, than the B grades and the C grades. Whereas a high risk to reward and low win rate trading strategy, it sort of somehow gives you this false sense of security that, hey, it's okay for you to just make a mistake here and there. It's okay for you to just take this trade and see what happens. Maybe you could get a bit of a win, and I'm not so sure about this trade, but maybe. So you get a lot of these maybes because my risk to reward is pretty high. Let's say maybe 1 to 10. So it's okay for me to take the next 8 trades, right? Like in those 8 trades, like, I've got the revenge trading, I've got the FOMO trading, I've got the C grade trades, I've got the B grade trades, I've got a few trades that I'm not so sure about, but let's just see what happens kind of trades, right? Why? Because I can afford to lose 8 times, right? And one single win would actually wipe out all these losses with a profit of 2, right? Because my risk to reward is, at one point, it gave me a 1 to 10. So this is the kind of mindset that you have if you have a very low win rate but high risk to reward trading strategy. So what you have here in front of you is a consecutive losses matrix. Okay, I did not make this. This information is available over the internet, and I know some of the traders have used this for their own reference as well. Now, on the left-hand side, okay, this is a percentage of win rate of your trading strategy or your trading system. Okay, so 5% win rate, 10% win rate, 15% win rate, 20% win rate, so on and so forth. The one across here, 2, 3, 4, 5, 6, is the number of consecutive losses, right? So losses in a row, right? So 2 consecutive losses, 3 consecutive losses, 4 consecutive losses, so on and so forth, all the way up to the 11 consecutive losses, right? 11 losses in a row. Now, first, I want to pull your attention to the red circle here, right? The 30% win rate. I'm using this as an example. Okay, let's say you have a trading strategy with a 30% win rate. Now, if you go across, this means that your trading strategy has a 69, well, or close to 70% chance or probability of 10 consecutive losses. And by the way, this sample is done out of 50 sample trades. Yeah, so let me repeat that. So this is not just 10 losses in a 50 trade sample. This is 70% chance of that trading strategy gives you a 10 losses in a row, right? If you are a new or developing or unprofitable trader, can you have the mental strength, right, to handle 10 losses in a row? I can't take 10 losses in a row, right? For me, that's not normal. And my question is this: as a new, developing, or unprofitable trader, don't you think it's going to be very difficult to handle 10 losses in a row? I'd say that's pretty difficult, right? For me, that would be very difficult personally, because 70%, that's pretty high. Because say, for example, use another example. Let's say you go to the doctor and the doctor says that, okay, look, after a swab test, there's a 70% chance that you could get a COVID, right? You would be worried because you would think that 70% is really high. Yeah, you wouldn't actually focus on the other 30%. You wouldn't say, oh, look, I think I have a good odds. I still have 30% chance of me not catching up on COVID. Of course, 70% is pretty high. So that is like almost certain that you can, that you could get 10 losses in a row. Right now, the next one, I want you to actually pay attention to this one, right? The one in the blue circle, right? Let's say, as a comparison, there's another trader that has a trading strategy that offers a 60% win rate. Okay, so nothing too crazy, right? I'm not giving an example of 95% win rate. And first of all, I don't believe that there's such thing as 100% win rate. Okay, that just doesn't exist. Okay, that's just 60% win rate. Nothing too crazy again. If you go across, right, 70%, similar to this, right, 69 and 70%, there's 70% chance of 4 losses in a row. Now, 4 consecutive losses compared to 10 consecutive losses, I reckon 4 is much more bearable, right, than 10 consecutive losses, right? And this is the most interesting part as well. Have a look. From 10 to 11 consecutive losses, right, there's still more than 50% chance. So it is more likely, right, for you to still get 11 consecutive losses than not, right? Although it's not as high, right, but it's still on the other side of probability, right? So anything above 50%, obviously, it's more likely to happen than not, right? So this is 55%, and this is what gets interesting. Have a look. Whereas with the 60% win rate trading strategy, as soon as you go from 4 consecutive losses to 5 consecutive losses, it drops pretty significantly, right? It's actually now falling on the right side for your sake, obviously, for the right side of probability, that's 37.7%. So it is less likely to happen. It is less likely for you to experience 5 consecutive losses because it's less than 50%. Yeah. And 6 consecutive losses is actually even dropping more significantly. It's only 17%, right? So it's very low for that to happen. Now, as a new or developing trader, why would you start your trading journey having to deal with this, right? 10 consecutive losses in a row, right? Why would you want to go down that path, right? It is already hard as it is. Why choose a harder path, right? This one is much more sustainable for a starting point. Choose something that offers you an edge over the market. So first of all, it has to be more than 51%, right? Because I do believe that it will give you a much smoother path to consistency. Especially in social media, on YouTube, a lot of new and developing traders are being lied to about a high win rate and low risk to reward is inferior to a high risk to reward but low win rate trading strategies, right? I believe that is actually being looked down upon in the trading space. And this is why a lot of the new and developing traders lean towards a low win rate and high risk to reward trading strategies to begin with, to start off with straight away. And I think the flow should be like this. If you are a new developing trader, what you need is you need to learn a trading strategy and you need to test that trading strategy, right? And you will collect the data and you will analyze the data. And then from that test, it should give you a low odds trading strategy, right? Meaning that it gives you a very high probability, right? Even though it offers you a low risk to reward, yeah. But still, you will have an edge over the market. You have a good win rate trading strategy. And from that good win rate trading strategy, you will have a consistent growth, right? Now, after that consistent growth, you then refine it again. You don't have to stop there. You can then refine it again back to your trading lab. You test more data, right? You do a lot of experiments. What if I entered earlier? What if I entered later? What if I take my profit further? What if I take my profit shorter? What if I increase my stop loss? What if I reduce my stop loss? All these sort of things, right? You keep on testing, you keep on experimenting until you still get a good win rate trading strategy that offers you even a better or a higher risk to reward. Then you have a much better growth, right? But it's actually through consistency that you build upon it. If you're not consistently profitable from the singles, the one-to-ones, right? Day in, day out, week in, week out, and then you chose a trading strategy that has a 30% win rate that offers you 1 to 5 risk to reward, I genuinely believe that it is an excuse for having an edgeless system, right? It's an excuse for you to losing more than you are winning. However, if you are already consistently profitable from the singles, from the one-to-ones, and through refinement, right, through testing, you get a better risk to reward ratio and still give you a good win rate, that is called strategic. That is not an excuse. And I do believe that this is the path that new development traders should take. However, on the opposite side, if you are a new or developing trader and you opt for a trading strategy that offers a very high risk to reward but low win rate, it is as simple as going to the slot machine, because slot machine gives you a very high odds, huge risk to reward, right? But you know as well as I do that you can't be consistent playing a slot machine, right? And your graph, your journey will be very erratic and very volatile, and you do not want that. So the takeaway point of this video is this: to achieve consistency, you need to find a natural edge in your system, right? That is an absolute priority. And increasing risk to reward should be an improvement, not a starting point. Thank you for watching, guys. If you find this video useful, hit the subscribe button and don't forget to like, comment, and share. Make sure you check out my other videos too.